Hey traders, David Frost, LazyEMiniTrader.com. In this video, we're talking about day trading. More specifically, we're talking about the S&P 500 E-mini futures contract. Now keep in mind, everything we're going to discuss in this video can be applied to any market, any stock, an exchange-traded fund, a commodity. It really makes no difference. We're talking about charts, we're talking about patterns, and we're talking about how price reacts and acts based on what the chart is telling us. And what I'm going to show you here is, in certain cases, we can identify a high probability trade setup where we can identify places on the chart during the trading day where there's a high degree of certainty that a specific price movement is about to happen. Let's frame out exactly what we're looking at. We're looking at 1 day's activity for Thursday, August 24th, 2017 in the S&P 500 E-mini contract. The black lines that you see running vertical on the screen, the one on the left represents the start of the trading day, and the one on the right represents the ending of the trading day. The horizontal lines running across the screen represent support and resistance for the day. And these can be derived in two ways. In the S&P 500 E-mini contract, I provide support and resistance to traders that want them. I send them out right before the opening bell. The second way is traders have an opportunity to take my course at LazyEMiniTrader.com, and within the course, among a lot of other things, is everything we're going to discuss tonight in this video, but in great detail, and secondly, how to derive these support and resistance areas on your own. Here's a snapshot of what's sent to traders right before the opening bell. As you'll see, this morning it arrived at 9:21 a.m. And I listed out the support and resistance areas that you see on the screen, plus a few more that were not reached today. What did come into play today is the first resistance area at 24.48, the 24.45, 24.42, 24.38, and 24.35 on the support side. The first thing we want to note is when the market opened right here today, we opened pretty much right beneath and then poked over just for a second the 24.48 area. That proved to be formidable resistance in the morning session. And as you can see, in pretty rapid fashion, the market sold off and didn't find a level of support until we got to 24.38. Now you would say, well, if the two levels above that, 24.42 and 24.45, if they're supposed to be support, then why didn't the market find support at those levels? And that's a fair question. In my course at Lazy E-mini Trader, I teach traders how to identify a high probability trade setup. You can't take a trade on a support or a resistance level alone, or at least what you deem to be support or resistance. There has to be a trade setup on the chart. A trade setup is determined when the chart forms a pattern, and patterns tend to repeat over and over and over again. Price moves for a specific period of time, over and over and over again, and then it will reverse trend. These are all the things, among others, that I teach in my course, where, for example, traders see a very specific reason why price found support at the 24.38 level. And it has to do with the amount of time that it took to get from 24.48 to 24.38. And the same thing occurred on the way back up. As you can see, it was a pretty choppy day out in the market today. There was a lot of back and forth behavior in the market, at least in the S&P. But that doesn't mean that it's not tradable. It is. When the market went back up from 24.38 back to 24.45, there's a very specific reason. In fact, there are at least two reasons why the market found resistance at the 24.45 level and then traded downward again. Traders that understand these price patterns and the specific amount of time that it takes to get from one point to another would feel a certain comfort level in, for example, buying the market at 24.38 or selling short the market at 24.45. As you can see, when the market fell out of bed again and went all the way down to 24.35, where it found support, there is a very specific reason the market found support at that level. Traders who understand what they're looking for, what to identify on the charts, how and why price moves in the manner in which it does, they have a different comfort level, a different understanding, and certainly a different confidence level of when and why to take certain trades. 2435 was an absolute buy area for several reasons that are all discussed in detail in the course. You can also see, for example, how important the 2438 area is. How many times the market hit this area, maybe pierced through it by a tick or two, but how many times the market was supported by 2438. You can see it happened many, many times in the afternoon session. And that's not to say that there was a tradable opportunity late in the day with all this back and forth choppy behavior. However, at least understanding why the market was continuing to find support at 2438 is important. I teach traders how to identify the important numbers and why they're important numbers, and whether it's a futures contract, a stock, a commodity, or an ETF. It makes no difference. It's the same methodology used across all markets. It's how and why certain things happen on charts. If you learn how to read the charts, you can learn how to trade the markets. If you want to learn more about becoming much more proficient and have a better understanding of how to day trade in the markets, then come over to LazyEminiTrader.com and you can learn everything you need to know in order to find success in the markets. I'm David Frost. Thanks for tuning in, folks.